Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today we again will take a look at the New Zealand dollar because on the euro currency we yesterday have taken the long discussion of the different scenarios, and right now euro currency still stands with the upward action, and the pressure that we have discussed yesterday, I mean the possible upside continuation, is still valid, and this pressure still stands on the euro currency, and market is challenging some resistances and still doesn't leave the idea of possible upward continuation. Meantime, on the New Zealand dollar, we have the progress in our analysis that we have prepared on the in the weekend. So if you remember, we have discussed the possibility of upward continuation here on the short-term charts. Although on the long-term charts we have the bearish patterns, bearish setup. First of all, we have the bearish butterfly here that stands in progress. At the same time, we have the bearish grabber on the monthly chart. This is in fact the bearish grabber of January. And right now, market stands in a retracement back inside of the body of this pattern. In fact, this setup will be cancelled only if market will exceed this top, because the crucial point for any grabber is the extreme. So and the grabber on monthly chart will fail only if market will climb right to this area and taking out of this top. Also, if market will taking out this top, this stands very close to each other, the butterfly will be cancelled. But at the same time, currently it's a bit early to speak about this, and right now we're just watching for this upward action and treat it as a retracement. So currently we have the long-term bearish setup, and upward action on the daily chart is just a retracement right now that could lead us the chance for taking the short position. In the weekend we said that although guys this action takes the shape of double repo pattern, this is not the double repo. Although we have thrust, we have closed below the 3x3, closed above and closed below again, because there's two significant difference between the bottoms of the double repo. The second bottom of the double repo should be the attempt of the continuum of lower, but here this is mostly just A, B, C, D action to the upside, not the double repo pattern. That's why we will treat it in this manner. And the final conclusion that we have made in the weekend on the overall situation was said, well, market probably will have not bad chances to continue move high because some patterns are forming on the intraday charts, and market stands with this ABCD, and we think that the upward action is still possible. So currently market hardly will turn down, and probably it will try to make another leg to the upside. And now you see that this is really happening. So market has moved above the monthly pivot point. This is the February pivot point, and trying to move next resistance area. So currently on the daily chart, the first area where we would like to get the sell signal, or the level at least where we will be watching for them, is right here. This is very nice levels. This is the major 618 resistance, 66.77, and also guys, take a look, this will be the daily overbought. So that's why it's very nice opportunity, because this will be if market will reach this area, this will be very important level. Here we see the potential stretch pattern here. So if market will meet the overbought right at the FIP resistance, this will be the Jordan directional bearish stretch pattern. This is the first part of the resistance on the daily chart. If you take a look at the 4-hour time frame chart, you will find the patterns that we have discussed. First of all, guys, take a look that market has exceeded the monthly weekly pivot resistance one, and this tells us this is not just a minor retracement here. So this is some sort of the short-term trend to the upside. Market really could continue move higher. So here we have two different patterns. First pattern is the ABCD that we have discussed, A, B, C bottom, D pattern that has the target 66.40. sorry, it's a bit lower, 66.30 probably. It's 100% extension this ABCD. Finally, we have the butterfly in progress that has particularly targeted 66.40, and both of them stands very close to the major fib resistance on the daily chart and to the daily overbought. So now you understand that this will be a really strong area of resistance where we could think about the taking short position. Because guys, as you probably know, and you probably have seen this very often, why we call every time to take the positions on the strong levels. Because guys, if we will take position here, market in one or other manner will react on this resistance. Maybe this will not be turned down, maybe this will be just technical response, technical respect of this area, but this will be enough for us to move our stop to the break-even. And if later we will become wrong and market will continue to move higher, this will be just the a painless risk for us, so painless trade. So we will lose nothing in this case. That's why it's better to have strong levels on your back when you're taking the position, because technical response of the market to this level will protect you and will let you to save your money, move your stop to the break-even. That's the attractiveness, that's the advantage of the strong levels. And particularly by this reason, we will be watching for this level, and maybe we will take the short position here, because overall context still bearish on the high time frame charts, and maybe market will turn down if these patterns will start to work. Maybe market will turn down somewhere in this area. So that's our primary object right now, is wait when the market will reach this area, and then we will drop our time frame maybe to the hourly chart, maybe even lower, and to get some reversal patterns here. If we will get any, in this case we will try to take the position. Area is attractive. Also guys, if we will have the directional Napoli directional now back with this stretch pattern, that will be even better. So, and later we will see. At the respect of this level, we will move our stops to the break-even and just watch what will happen. So that being said, right now we are waiting for reaching of the 66.50, 66.77 area, and after that we will decide whether to take short there or not.